we officially Thanks. Before we officially start the sessions, these sessions will be recorded, and if you do not wish to be included in the recording, you can now turn off your camera. Now I'll pass the time to Andre to lead this conversation.
Right. Thank you, Nancy, and thank you, everyone. For those that aren't familiar, I'm Andre. I'm a part of the Community Sector Council team, working on our Social Innovation Lab. And so I think to start off the session, Emily, if you can make yourself known, if you want to take over screen share and pull up your slides, and we can dive into your presentation. We can also do Q&A at the end. And then we'll flip to Kyle's presentation as well. So we'll have time for 2 presentations and Q&A.
Awesome. All righty, I will jump right in. Can you guys see that?
We can. Looks great.
Okay, awesome. Well, thank you so much for having me today. I'm really excited to be here, and good afternoon or morning, depending where you're joining from. My name is Emily Mercy. I am the co-founder and managing director at GoParity Canada. And yeah, thank you all for joining me today. I know Nancy gave a brief land acknowledgement, but I just want to invite you all to acknowledge with respect the lands in which you're joining from. I'm here today in Victoria, British Columbia, the ancestral and unceded territories of the Lekwungen people, known today as the Songhees and Esquimalt nations. These lands have been cared for by the Lekwungen people for thousands of years and remain inseparable from their lives, customs, and culture. I would also like to recognize and thank the Songhees and Esquimalt communities, past, present, and future, for their stewardship, leadership, and teachings. All right, well, let's get started. So I believe it's important to always start with why. So before we dive into GoParity, I'm going to tell you my why. So why I was compelled to create change in this space and ultimately start GoParity Canada. So I hope it's okay. I'm going to start with a little story. First, you might have noticed I'm pretty young. That's true. I'm only 26. That being said, I've spent the last 5 years fully immersed in the Canadian personal investment space. And when I was just at the beginning of my investing journey, maybe when I was about 20, I only really had 2 goals when it came to investing. The first, invest my money. Okay, so that's kind of self-explanatory, but it is an important differentiation from making money, which I think is a lot of people's investing goal. But for me at the time, it wasn't even about maximizing returns. It was just about getting into the market and learning. Now, the second goal, other than invest my money, was to invest sustainably. So that sounds easy enough, right? So I went to my bank, BMO at the time, and invested in their most popular clean fund, the one you see here on the slide. And for a couple days, I thought I achieved my goals. But I was just starting business school at the time, and honestly, out of peer pressure mostly, I felt like I had to learn a little bit more about these investments before participating in conversations about them. So when you look on the surface level, this fund looks great. It has a good ESG score, which means it was rated highly for environmental, social, and governance factors. And that's also what you see on the slide here. But I took things a step further and checked what companies were in this portfolio of clean investments. And that's something that most investors don't bother with, because most investors aren't being pressured by their peers to talk about their investment portfolios and nerdy stuff like that. So I took a look at the companies involved in this clean fund, and a third of the investments in this clean energy fund were actually in fossil fuel companies, 1/3. So that was my wake-up call, and that was my why. And this is one example of a huge trend of so-called sustainable investments that are just completely lacking in transparency and not aligning with the categorization that they're labeled as. In my research, I did find investments that offered a competitive return while also being truly meaningful and creating real positive impact. But they weren't accessible to me or to 98% of the Canadian population. So this was the challenge. Can we have truly sustainable investments that are accessible to the general population? The first thing I want to know is what makes up a truly sustainable investment? How do we define sustainability and where do we draw the line? So I would love for you as participants to share in the chat how you would define sustainability and what would you look for. And this can be as general or as specific as you'd like. Let's see if I can pull up the chat here. And yes, feel free to drop questions in the chat as well. So how do you define sustainability? What factors are we considering? Don't be shy. Triple bottom line. Nice. So yeah, triple bottom line is a great one. And actually one of my favorite ways to describe sustainability. I think it's a really important one. Triple bottom line means you're looking at social, environmental, and financial factors when you consider investment, a business. It can really be applied to anything. And I love that one because oftentimes when we talk about sustainability, we think of it's really environmental, but triple bottom line takes a really holistic approach to sustainability, which includes financial sustainability, which is of course important as well. So I love that. A return focus to a social, community, or environmental cause. Nice. So we're still using those same factors. Similar to the triple bottom line, we've got social, community, environment. Awesome. Love this one by Maureen, meeting today's needs without sacrificing future needs. I really think that is a wonderful example of sustainability and really encapsulates what it's all about. Okay, Regina. Sustainability is looking at things in the long term, protecting the future. Yes, so this long-term vision, we're not investing in things that are immediate profits, but we're thinking about our future. Awesome. Love it. Okay, so those are great. And definitely aligned with how I would define sustainability. Now, going back to my personal journey, when I started asking these questions in relation to an investment, what makes an investment sustainable, I actually discovered impact investing. Now, some of you might have heard about impact investing already, but for those of you that haven't, impact investing, they're investments that generate a positive, measurable social or environmental impact alongside a financial return. And for me, what I love about impact investments is that measurability aspect. When we're measuring impact in both a quantitative and qualitative way, there's inherent transparency built into that type of investment. And as an investor, you know exactly what you're investing in. The problem with impact investing when I was getting into it was really only available to what's called accredited investors. So that's a group of people who represent the top 1% to 2% of Canadian earners. So impact investing basically inaccessible to the majority of Canadians. There were other alternative options like bonds, which I'm not going to get into, community bonds, because you're going to learn a lot more about that with Kyle. But in terms of just pure for-profit investment, I was seeing impact investments, but I wasn't able to participate in them. And at that time, simultaneously, we're also seeing the importance of increasing investment in impact causes like the Sustainable Development Goals, the SDGs. And the UN estimates that globally we need $5 trillion invested into the SDGs every single year, and we're not reaching that target. And it's not because the target or the number is too high, because we have enough non-accredited private wealth in Canada alone to meet the global investment targets. So that means that take away that top 1 to 2%, the rest of us Canadians have that power in our hands to create some real significant change. So even if we can unlock some of this capital, even 1%, it would make a massive impact. So with this context, you can see how my personal experience, my why, is so much more important and powerful when it's grounded in this macro context where you can see just how much influence we have as everyday Canadian investors. And yeah, that is the why behind GoParity Canada. It took my co-founders and I 2 years of behind-the-scenes work to launch GoParity Canada. So how did we do this? A huge reason for our success is that we were acutely aware of our strengths and weaknesses. As a strength, we understood the problem. We had not only done the research, but experienced the problem at hand as Canadian investors wanting to create real impact. But looping back to how I started this presentation, we were young, back then even younger. So we lacked experience. And as it turns out, lacking in experience makes it difficult for people to trust you with their money. And things really changed when we met GoParity Europe. So GoParity is based in Lisbon, Portugal. They had been democratizing access to impact investing for a decade. And they had, at the time that we met them, a minimum investment of €5 and allowed European citizens to invest in meaningful projects where the impact was measured. You can invest locally, you can invest in something that aligns with your values that might be, across the continent. And eventually, in the summer of 2021, because we had the same mission, we had the same values, and we were a young team wanting to have a level of experience and expertise, we decided that our Canadian team of entrepreneurs would bring the GoParity impact investing model to Canada, hence GoParity Canada. So we worked with Canadian securities regulators for 2 years to adapt the existing model for the Canadian regulatory environment. And we built a legal framework and online platform to actually make this happen. So GoParity Canada launched its first project almost 2 years ago, and we have a community of over 700 Canadian investors across 5 provinces, with over 700,000 invested in established Canadian small businesses working on meaningful social and environmental initiatives across the country. And for the most part, we work with for-profit, small and medium-sized businesses to provide affordable, accessible loans raised from a community of people who care. And those individuals who care get to invest in Canadian businesses, creating meaningful impact and earning competitive annual rates of return. So our average interest rate is 6.5% a year. And we've done everything we can to make this as accessible as possible. You can get started with just $20. We don't charge any investing fees, and it takes just minutes to sign up, which you can do all on your own. And you may be thinking, why hasn't this been done before? And the 2 years of working with securities regulators is a little hint. Oops, I am scrolling through. Sorry about that. So small businesses do incredible work. And when I say small businesses, I'm referring to privately held companies. So companies who are not yet publicly traded in the stock market. A big challenge is that it's expensive to have individuals make investments outside of the stock market. And for a long time, investment providers have only been able to break even on their costs by dealing with fewer investors who have more money, hence why impact investing was largely available to just that top few percent of Canadians called accredited investors. But here's where GoParity's crowd lending model really changes the game. Our investing platform is designed to be fully self-directed and cost-efficient, thanks to our automation features built into every step of the investment process. We use we use a lending model, so it's not donations and it's not purchasing stock. You're lending your money directly to a business project that needs funding. And we manage the flow of funds and all of the legal work. So it's really simple for both an investor and a borrower organization. As an investor, you choose what you want to invest in and you choose how much. So explore projects, see exactly who you're supporting and track the impact of your investment dollars. It's not only a great platform, but we're engaged in a global community of folks looking to connect and learn from one another. And impact investing, it can be intimidating, but we've found a way to make it exciting, empowering, and heartwarming. So globally, we have a community of over 50,000 people. We've financed hundreds of projects across a range of impact areas, raising tens of millions of dollars for meaningful sustainability initiatives. And in Canada, we've financed renewable energy projects for remote Indigenous communities on the West Coast. We've financed life-saving technology for at-risk populations, and an oyster farm in Nova Scotia, and so much more. But here's the piece of news that might come as a little bit of a damper, but just wait till I'm done. Right now, we're licensed to offer our investments to citizens in 5 Canadian provinces. So we're currently in BC, Alberta, Manitoba, Ontario, and Nova Scotia. So we're missing the best province. I know most of you are joining us from Newfoundland and Labrador. And that being said, we have some really exciting news that's actually being announced for the first time in this presentation, which is that we are expanding to Newfoundland and Labrador in the early fall. And we're already working with the Provincial Securities Commission to be able to offer investments in the province. And we're looking to connect with local organizations who are looking for a loan to finance a social or environmental project. And we want to work closely with you and make sure that we can try and raise as much of these funds as possible through the local community. So after my presentation, I'll just add my contact information in the chat. It may be in a follow-up email. I'll include that as well. Because yeah, I would absolutely love to connect. And if you have a project that you want to talk to us about financing, we would love that. The other side is that we'll soon be able to raise investment through individuals in the province. So what I encourage you to do is sign up for our newsletter, and I'll also drop that link in the chat. And we don't send too many emails through our newsletter because I know how annoying that can be. So don't worry, we do a couple email updates per month with what's happening in our community, new developments with GoParity Canada, little education and news pieces around impact investing and related topics. And of course, we will announce new and exciting projects. So I would absolutely appreciate if those of you attending today could take that step in joining our impact community by signing up for our newsletter. And of course, we'll be putting out a big announcement once we're launched in Newfoundland and Labrador. And I know how supportive and welcoming you folks are over on the other coast, the East Coast. So I would absolutely love to have you take this big step with us. Awesome. Okay, so lessons learned. This journey has taught us a lot. First and foremost, transparency is non-negotiable. So early on, of course, with the why part of the story, we realized how much skepticism and confusion exists in so-called sustainable investments and how critical it is to give investors clear, and honest information about where their money is going and what impact it's making. This commitment to transparency has been the cornerstone of our work and something our community deeply values. Another key lesson has been the importance of accessibility, not just in terms of lowering financial barriers, but also in making the entire investment process approachable and understandable. We saw that many people want to invest for good, but are intimidated by jargon, paperwork, the fear of making a mistake. Automation and a user-friendly platform is a big part of how we make this accessible, but we've realized the importance of going beyond that and providing impact investing education. That is really the critical piece. We've also learned that building trust takes time and requires consistent open communication. As a young team, we had to work really hard to prove ourselves. Not just to regulators and to partners, but every single investor who chose to join us. So listening to feedback, responding really quickly to concerns, and just showing up authentically have been an essential part in earning and maintaining trust. And finally, we've come to appreciate the power of community. The most meaningful progress happens when people feel connected to projects that they're supporting, to a broader mission and just to each other. So the role isn't just to facilitate transactions, but really foster this sense of purpose and collective impact. So yeah, these lessons, they continue to guide us as we're growing, reminding us that democratizing access to impact investing is just as much about people and relationships as it is about technology and finance. Since I've already shared a few of our metrics, I just wanted to finish off by telling an impact story. I suppose another learning for me has been when it comes to impact, metrics are really important, but what people really connect with is stories. So last year, just about almost exactly a year ago, we financed $100,000 for Sober Island oysters. Sober Island is a family-run oyster farm on an island off the coast of Nova Scotia. They used this financing to buy 500,000 oyster seeds, which are basically these tiny little oysters, which they could grow to sell from to $1.50 to $2 per oyster. But besides having great profit margins, I was not aware of the amazing environmental benefits that oysters have. Oysters are one of the most sustainable forms of protein. They actually filter the water, cleaning their local ecosystem, and they sequester carbon through their shells. So we financed the $100,000 through a group of about 70 investors who were just as keen as I am to learn about the amazing benefits of oysters and really the story behind this incredible community-focused family farm. So when the oysters arrived, we received pictures, videos, and some really lovely messages from Michelle and Trevor, who are the couple who own the farm. And they showed us how the whole community came out to plant their seed. So grandparents, kids, and absolutely everyone in between. And it was a very special moment for me to be able to share these messages with the investors who supported this project. And I know it was a really special moment to receive that update for investors as well. And so to conclude, you can see the difference between an investment with the bank and something like Sober Island. What we're offering really is an opportunity to create real change and to connect. And so we're so excited to continue to grow that positive impact across the country as we enter new provinces like Newfoundland and Labrador. Thank you guys so much for listening. Yeah, I think we hopefully have time for a couple questions.
All right. Great presentation. Thank you for walking us through it, and also very excited for GoParity to be expanding to Newfoundland and Labrador. We'll pause for a couple moments here for questions. I actually had one. You touched on this earlier in the presentation, but the difference between accredited and non-accredited investors. It might be helpful just to kind of define that for us, because there can be some barriers there, and I think the GoParity platform is really helpful for getting around those.
Yeah, for sure. So the definition differs a little bit between different provinces across Canada. And it's based on a few different factors. So there's a couple ways that you can qualify to be an accredited. I'm gonna say I probably don't know exactly what it is for Newfoundland and Labrador, but generally speaking, you have to have net financial assets. So all of everything that you own, your investments, your bank account, all of your financial assets, that has to add up to $5 million. Or you can have a combined income with your spouse of, I believe it's $5 as well. So it's these different factors that are on basically your income, how much you make every year, or your wealth, so what you own. And yeah, accredited investors makes up approximately 1% to 2% of Canadians. The rest of us fall into other investor categories. A common term for it is retail investors. That's often what we categorize as non-accredited investors. And how we differentiate on our platform at GoParity is you sign up for a GoParity account. You answer some personal and financial questions. So like any investment platform or bank, when you're signing up, we do take very similar information so that we can, provide you with a tax receipt, and also do our legal and regulatory reporting. But beyond that, we do have these kind of regulations that are there for investor safety. So as you're signing up, we'll ask you questions of what is your annual income? What are your net financial assets? And different questions like this to get an understanding of where you fit within that scale. And then we will on your account. So you can't actually invest too much with GoParity. We will limit you based on what your net financial assets are. And that's just a safety procedure to make sure you're never investing more than what you can afford to lose with GoParity, and not ever allocating too much into just one investment field, right? So you want to make sure that you're always diversifying your investments across a broad range. And we usually encourage investors to just kind of dip their toe in, and the low minimum investment amount really allows you to do that, and to do that across a variety of different projects. You can invest 20 in 5 different projects, and that's you can diversify your portfolio. So really it's about safety and making sure that everyone has a space to feel comfortable and safe and try it out.
All right, thank you. Another couple questions came in. One from Afolabi. How can a startup lending firm benefit from the activities of GoParity?
A startup lending firm. So I think that with a startup lending firm, so we've worked with kind of ecosystem partners, and that's something that's really important in the social finance space and the finance space in general, for Canadian businesses to be working together and helping one another out. So we've worked here in BC with organizations like Futurepreneur to help organizations find the type of financing that is right for them. So we don't provide financing, but we have a lot of startups that will come to us and say they want to do a project with GoParity. Instead, we'll refer them to an organization, a lender, maybe an investor that can provide them with that financing. Something I want to do is in this space is turn somebody down and then say, well, and there's no other options for you. I don't have any other recommendations. We're really here to lift up each other. So I think developing really great ecosystem partners is awesome. And maybe a business that exceeds the startup categorization would approach this startup lending firm and to be a better fit for GoParity. And that would be awesome to be working together like that and helping each other find the right fits and getting more financing to these companies. A huge struggle is just figuring out who to talk to, and with startups and small businesses in general, what resources do they have access to is something that is so challenging to navigate. So however we can connect this ecosystem and make this spider web, basically, I think is the answer. So I'd love to connect with you and yeah, discover a little bit more about what you do and maybe how we can work together and help each other.
Right. Yeah, partnerships are so important, as something we've seen as well, especially for raising funding. I think we'll do time for one more question. How is the interest rate on the loans calculated?
Great question. Yeah, so we have a due diligence process where we basically assess the risk of every single project on our platform. So with our risk assessment method, we have an internal and an external risk assessment. So we look at really common metrics when you're assessing any loan and the risk of any loan. So like risk of default, for example. We then assign a risk rating, and we send these kind of, common metrics, these financials to our external risk assessor as well. They assign a risk rating. We compare the two and then make sure that everything's aligned. We also have our risk assessment officer who we share with our team in Europe, actually. So he has 20 years of loan underwriting experience and can kind of bring that reality context into any project because I know it's not always just as simple as the numbers. And then with those three methods, we finalize a risk rating. So our rating system goes from A+ all the way. We don't finance anything below a C because that's just too high risk for our portfolio. And then we will assign an interest rate that's aligned with Canadian borrowing rates at the time. So it's something that is semi-negotiable due to other factors like the length of the loan, the term. We have a lot of flexibility. We can do grace periods and things like this. So there's a bit of margin for negotiation, but generally speaking, we'll just try to align it with pretty standard borrowing rates. But oftentimes we can get a little bit more competitive rates than what you'll see with the banks. But it would likely be quite similar.
Okay, and for folks that are interested in the recording, we'll make that available on our YouTube channel. Thank you so much, Emily. If you have that newsletter sign up and your email, we can share that with folks as well, so they can stay in touch with you and learn more about GoParity.
Yeah, I'll pop that into the chat.
Awesome. And let's keep on rolling to our next speaker on social finance. Kyle, if you want to go ahead and share your screen and then take it away.
Absolutely. Thanks, Andre. Hi, everyone. It's really great to be here. My name is Kyle, and I'm with Tapestry. I am the growth saying. I think experience firsthand of how welcoming everyone were in the community, and I think that's a theme. Like the power of community, as Emily mentioned, will be a theme of my presentation as well. And so a little bit more about Tapestry as an organization. We were a nonprofit cooperative that was founded in 2018 by our parent company, the Toronto Renewable Energy Cooperative. So it really all started with a wind turbine renewable energy project in downtown Toronto. Ever since then, a lot of other nonprofits, charities, and co-ops reached out to our parent company saying, how do we replicate this for our respective sectors in our communities? And that's how Tapestry is born, to kind of be that North Star and guide to support social purpose organizations across Canada. And so we at Tapestry are essentially the full service consultancy that works with these groups every step of the way to help them set up a community bond, assess its feasibility, advise them in the raise of capital, and then also help them manage the bonds for the life of the term. And to date, we've advised our issuers to raise a little over $135 million across 4,800 investors to finance roughly 70 meaningful community projects in a variety of different sectors. So we started in renewable energy, but then we expanded into co-working spaces, arts and culture, most recently affordable housing. And so the challenge we are hoping to address is twofold. One, there are nonprofits, charities, and co-ops who want to acquire assets and scale their impact, but they need access to low-cost patient capital. And then two, there are a lot of individuals and institutions who want to invest their money in positive ways, but they need investment vehicles to be able to do this. And so our primary solution is the community bond. This is an innovative social finance tool used exclusively by charities, nonprofits, and co-ops. And this is where they leverage that power of community. And so very simply, a community bond is a loan that organizations borrow from individual community members, local businesses, foundations. Anyone across the country can invest in your community bond. And the reason why it's an effective tool and why we've seen so much traction is because organizations set their own terms. So they get to set their own interest rate, they get to set their own term length, they get to set their own investment minimum. So it's really bespoke and flexible financing for exactly what they need it for. And the graphic on the right shows the circular nature of the community bond, where an organization works with Tapestry to issue a bond. A community member will purchase this bond. When enough community members have bought a bond, they can finance the project. And then through that project is how they'll be able to repay those bondholders over time. And then at the end of the term, there are also options to reinvest for investors to reinvest their capital as well into subsequent projects. And this is how a lot of the nonprofits and charities that we've partnered with have been able to scale over time. And so we see three key benefits of this model. The first is that community investors are able to make a fair return by investing in projects that they believe in. Nonprofits and charities are able to own assets that enable them to that allow them to scale their impact and ensure their own long-term financial sustainability. And then overall, communities are better served with the spaces and services, access to spaces and services that they need to thrive. And so why should you consider issuing a community bond? Well, first, as I mentioned, it's a really flexible tool. Unlike a traditional mortgage or loan from the bank where you accept whatever terms that they give you, you are in a position to set the terms yourself. They're also really inclusive. We try to cast a pretty wide net in that the lowest bond typically starts at about $500 to ensure maximum participation. And then we've also seen institutions come in at millions of dollars as well. So it's really inclusive in terms of engaging different types of investor profiles and communities. They're also really engaging in that it creates a powerful sense of pride and ownership. A lot of people who invest in a community bond, especially if it is a project in their local neighborhood, can point to that tangible project building and really have that sense of pride because unlike some of the like the ESG funds out there where you don't really know where your money is going to, this is very tangible and people are able to see the direct impact of their capital. They're also typically a lot more efficient than traditional donation campaigns. As we know, a lot of people invest more than they donate. And so when I go into some of those case study examples, you'll be able to see how fast some of these groups have been able to raise from their communities. They're also really in demand. And I think Emily can also speak to this, but there is definitely a shortage of these type of as quote unquote genuine impact investment opportunities on the market. And so every single time a project launches, especially with one of our issuers, every single campaign has always sold out. And they're also scalable. And to just kind of give a quick case study example, one of our oldest and largest clients, SolarShare, which is the largest renewable energy cooperative in Canada, if not North America, they started out with a $200,000, $300,000 community bond, and to date they've raised a little over in community bonds to scale up their renewable energy projects across Ontario. So it goes to show that once you've built that dedicated investor pool, it really is easy to scale up your operations from there. And so again, how Tapestry helps is that we have an expert team of consultants to guide organizations through a structured process. And we also have a secure and scalable digital platform to manage the bonds over time. And so this is kind of a snapshot of our process. The first step is an initial planning and feasibility study, and this is where we're trying to answer two key questions. The first being, whether the project is financially sustainable, but in particular, how community bonds actually stack with other forms of funding and financing to make a project move forward. And then the second aspect is the community aspect. So once we've looked at an organization's pro forma, been able to derive some sample community bond terms that might work for the project, we take that into community by way of investor consultations. And we like to bring a few different investor profiles to the table. So an everyday retail investor, an institutional investor like a foundation, a local business. We just want to hear different perspectives and get on what they'd like to see from the community bond. Is this a vehicle that they're interested in investing in? And so we like to do this prep work on the front end to ensure that an organization will be successful. Structure the community bond. And this is where we do the bulk of the setup work. And so what that involves is preparing an an investor package, which typically includes an offering statement. So very similar to a prospectus or term sheet that highlights all of the community bond terms available, potential risks, risk mitigation strategies. We also help organizations develop a dedicated sales and marketing strategy on how to best convert the social capital that they've built over the years into financial capital for the organization. And then we also do the infrastructure setup on the back end. We have a proprietary investment management platform that takes care of all of the bond processing and investments. And so once everything has been set up on the back end, we can move into the third step, which is called raise. And this is where Tapestry continues to support our clients on the back end with that investment processing. We also field any PR opportunities and event sponsorship opportunities as well. But it's really critical that the organization has the capacity on the ground to be raising capital, soliciting investors, knocking on doors. And so once an organization has reached their raise goal, Tapestry will also manage the bonds for the life of the term. So the T5 investment tax slips, interest disbursements, reinvestment campaigns, new investment campaigns, that kind of falls all under our purview. And so going into a few case study examples, this is one active investment campaign that we have in Barrie, Ontario. It's a $10 million project to finance a portfolio of different affordable housing projects. Common myth is that a community bond could only go towards one individual project. But I think more and more we're seeing a lot of nonprofits and charities grouping a few different projects into a portfolio and then raising the capital all at once. And this is what Redwood Park Communities is doing. Another example, this is of a complete investment campaign, Places of People. They are a small grassroots affordable housing charity based in Haliburton County, Ontario, which is a couple hours north of Toronto. They were able to raise $850,000 in 10 weeks to refinance their affordable housing project. And I think it's also worth mentioning that they're their county only has a population size of $20,000. So I think another common misconception is that, oh, the community bond tool can only really work for large urban centers or larger projects, but that's simply not the case. We've seen it do particularly well in rural, smaller regions because kind of that sense of community is typically a lot stronger out there. And so another successful campaign that I want to highlight is Indwell. They are an established charity based in Hamilton, Ontario, and they, similar to Redwood, also did the portfolio approach where they raised $6 million to finance the pre-development costs on 4 different affordable housing sites, and they were able to raise the $6 million in 3.5 months. Now, granted, they did have a really strong community to begin with, and even before the community bond model, they had their own impact loan program. And so some of those high net worth individuals in their network would directly loan them $50,000 or more. And that's how they were able to amass their portfolio of about 1,200 units, which makes up about a little over $250 million in value. So I think I wanted to highlight that, the community bond, I guess, model of, borrowing from, friends, family, the community, broader community to get up to build assets that everyone can benefit from, that in principle is not new. Maybe the term the community bond is newer, but these forms of financing have been around, for years and years. It's one of the probably the earliest forms of financing. And so we're really trying to build the marketplace for that. And so if you have a project and you're interested in taking the next step, this is a good project checklist that you could kind of run through to see if you have what it takes. So first, we like to work with groups who have that clearly defined project with a clear funding gap. It says $1 million plus in brackets, but we've done raises less than that. But I think that is more so just recognizing, it takes a lot of work. And there are also like Tapestry's consulting fees. So the $1 million mark is typically where groups get the most bang for their buck. There should also be some internal capacity in the form of a project manager, someone to lead financial modeling, marketing and communications. You should ideally need the capital within 8 to 12 months. So again, if you need capital, I don't know, in the next 2 months, probably not the best fit. And if it's, over like 2 years, it's still a little too early. And then ideally you would have an existing community of support, but, we've also worked with groups who've started with 0 staff, 0 assets and 0 community, and they've still been able to raise capital to move their project forward. And so we have this dedicated intake program that will complete that first phase that I mentioned, the feasibility study, to really give you a yes or no answer on whether community bonds might work for your project. The next intake will open in a couple weeks in June. But if you go to our website and click the Raise Capital button, you can fill out an intake form right now, and we'll review applications on a rolling basis. And so this is a summary of our current clients. Again, we work with, I think we pride ourselves in not just working with large established players, but also some of the smaller grassroots organizations too, to highlight some of those, like River Clyde Arts, their grassroots arts collective in PEI, Fresh Winds Eco Village, another grassroots affordable housing initiative in Phil, New Brunswick. We're also working, especially on the East Coast, like United Way Maritimes, Housing Trust of Nova Scotia. But then we also work with some of the larger players like Fred Victor, City Housing Hamilton, Dixon Hall, among others. So yeah, like we have a pretty diverse range of groups that we work with, and again, this is across multiple different sectors. And so just to kind of conclude with some statistics, if you're curious, the average individual investment size of a community bond is a little over $13,000. The average institutional investment size is about $115,000. The largest investment size to date has been from a pension fund at 2.5 million, and the smallest investment size has been $500, although we are working hard to drive that number down to something a little bit more accessible, like what GoParity has. And in terms of the breakdown of individual versus institutions, we're looking at about 86% individuals. So again, very much place-based investments that naturally will attract a lot of community members. And then we're also looking at about 14% institutions. And the average rate of return for investors in 2024 was about 4%. And this is pretty typical with the community bond organizations have raised capital from 0% to, or have offerings at 0% to about 5%. And it's always been pretty consistent within that range. Again, we're dealing with nonprofits, charities, and co-ops. So I think when people are investing in a community bond, that is what they need to take into consideration, is that you need to concede on the financial return in order to have a greater social return on investment. And so these are for categories of people that will invest in a community bond. So, there's the impact seekers who want to just do the most good with their money. There's, of course, local supporters who are aware of your project and want to support and continue seeing your organization thrive. There are also folks who are cause connected. So maybe they're not in your local community, but they like the cause that you're supporting. And an example of this is Indwell actually received investment from both the Yukon and Northwest Territories. So even though those investors weren't directly impacted by Indwell's work, they appreciated the cause, and that was affordable housing. And then the last group is probably the least popular, those who are just return focused. I think it's usually a combination of both. I think, again, if you're looking to have the most financial return, a community bond might not be the best tool because, again, it really prioritizes impact. And I think when we sent out the investor survey, about 97% of investors identified that the social impact or the social return on investment was kind of that key motivator, with return being a second priority. And so, yeah, as you can see, in terms of age groups, a bunch of different demographics purchase the bond. And again, I think what's worth noting is that we see about a 70% reinvestment rate with these community bond opportunities. And so it just goes to show if you've been able to show investors that you're paying out interest on time, you're servicing debt on time, and you are able to hit your impact milestones, that these investors really want to stick with you for the long term. And so the moment you have a subsequent project or you want to refinance your current project, those investors are typically the first to step forward. And so, yeah, that's all I have for you today. Happy to answer any questions you might have.
All right. Thank you, Kyle. A lot of great data in that presentation as well. Okay, we do have a couple questions. I'm going to tackle these in backwards order. Sabina asks, what de-risking mechanisms have been tested to attract more institutional investors and grow the size of the investment?
Yeah, that's a great question, and something a strategic project that Tapestry is working on is called the Weave Community Bond Fund. And so, as I mentioned, community bonds typically have always been really good at attracting kind of local, smaller retail capital, but it hasn't really tapped into that institutional market. And so, when we're talking to institutional investors, I think for them, they want to see an aggregated product of a scale and size that would be worth it for them to conduct due diligence. And so the Weave Investment Fund is a $30 million fund that will specifically target institutional and accredited investors and provide that aggregated product to give them diversification across all community capital projects in the country. And so essentially, if an organization works with us to launch their community bond campaign, we will be able to provide a loan alongside that at identical terms to their community bond. So it'll still kind of contribute to their community bond investment goal, but that capital will come from the larger institutional and accredited investors. And on the de-risking side, loan guarantees is something that we're actively exploring and looking at. If we're able to get, a larger foundation or government to essentially backstop the loan in case of default, then that pretty much brings the risk down to zero. And a lot more of those, the pension funds and other institutional investors would likely come to the table then. And so, yeah, we're thinking of different ways of how to engage those larger private capital management firms and fixed income asset managers.
All right. Yeah, that makes a lot of sense. Emily, you had looks like a couple questions. Do you want to unmute yourself and just go ahead?
Sure. Yeah. Thanks for the presentation, Kyle. I was wondering, when Tapestry begins a community bond campaign with a nonprofit or charity, what are some of the steps that you take to raise investment locally? And generally, are investors familiar with community bonds, or is there some sort of education piece that you usually do for the local community surrounding that organization, that nonprofit, that charity?
Yeah, it's a great question. The community or community consultations on the front end is so important, is to kind of gauge, how familiar are these community members with the vehicle, and is this an attractive investment to them? And I think that will really tell us whether a campaign will be successful down the line. And again, we always try to advise our clients to do a whole host of different community events like farmers markets. And then we also support on the PR to really make it kind of like a national movement. And so again, we, like Tapestry ourselves, we don't do much in terms of the actual solicitation on the ground with these investors. Those nonprofits, charities hold those relationships and are best positioned to kind of sell their cause and speak to the case for support. But we're simply here to kind of guide them kind of along that entire process of raising capital. What are those best practices of engaging their community? And I think something that I'm working on is how these community groups are able to communicate the impact of their project and those milestones over time, because I think yeah, there are nonprofit and charities, they do great work, but sometimes they don't always measure it. And so impact measurement has always been something that's top of mind for me of, if the primary driver of investment is the social return on investment, then how do we kind of get into that regular practice of communicating, to those investors and building up that supporter base that will, always be the first to step up when a new project comes forward. And so that's kind of what I guess our role, long answer to that question, is our role in I guess advising our issuing organizations to get a feel of what their community is like and how they could best steward them following their campaign.
Awesome. Yeah, great answer. Thanks for that. Seems like there's a different approach that, depending on the organization, you have to be just really aware and take each campaign as it comes. So
yes,
yeah.
absolutely.
All right. And you did just touch on this, but Nancy had a question. So for campaigns, do you typically see the funding is all coming from the same province of that project, or is it coming from elsewhere as well?
Yeah, I would say probably 85% of the investors will be in the, if not more, because again, these are very much place-based investments. So I think the easiest sell is for communities who are directly in that region, who can see the visible and tangible impact of their capital. But again, like I mentioned, when we worked with Indwell, they did receive investment from like the territories and other provinces. And so if it's a really great cause, I think there can definitely be a case for other provinces to come in as well. Especially on like Indigenous projects too. Some of those that we're working with, it's clear that their communities might not be able to mobilize as quickly, just given their more rural and remote nature. And so we expect, you know, kind of the whole country to kind of band together to support those projects in the north. And so it really depends on the project to project as well.
All right, makes sense. Okay, I'll pause for one more. Any questions for Kyle or Emily? And once. Okay. If not, thank you both for sharing your insights today. Two great organizations doing great work in social finance, and so really appreciate your time. We'll make available the calls to actions that you had, your signups and emails with folks that joined today. And then if you're both okay with it, if we can also share the presentations. And then for folks that are here, if you're not in our Slack channel yet for the community of practice, we'll also be making some content available there. So we'll send the links to sign up there, but appreciate everyone joining today. Nancy, anything I missed? Any final word?
No, it was a very informative and inspiring presentations. I don't think we have talked a lot about social finance so far. Andre has been a great addition to the Community Sector Council to really pushing social finance forward, and I hope everyone find it useful. I will leave everyone to connect with Emily and Kyle separately and individually after the call, but I hope you all find it very useful. Thank you so much, everyone.
Thanks, everyone. Have a great day.
Have a nice day.
Take care.
Thank you so much for hosting us. This was a lot of fun.
All right.
Thanks.
You're very welcome.
Thank you.
Thanks for coming.